When is the best time to start financially planning?
Yesterday. I was a really lucky kid.
I'm a big believer that numbers hold specific powers.
We are our own worst enemy when it comes to investing because we have this thing called emotions and psychology. Technology has dramatically changed the business. It's a safer world to be an investor. There's more transparency. There's less cost, and markets are more liquid. Meaning if I really want to sell my Microsoft, I literally can sell it in 1 second. To save more, you need to work more.
Welcome to the Money Signal podcast from Main Street to Wall Street, where today I am joined by James Demmert, founder and CEO of Main Street Research. Hey, James.
Nice
so good
to see you.
So good to have you here. Thank you so much.
Thanks for having me.
Before I had heard of you, this is like the backstory and context of, again, our meeting. But before I had heard of you, when Peter and I decided to do this podcast, we were very interested in figuring out and coining specific phrases from a marketing perspective that would work well in our favor. So again, I'm the marketing guru and branding expert. And both of us knew that Peter represents Wall Street. That's pretty clear. And I really speak on Main Street stages because I analyze consumer behavior. And in financial terms, obviously, Main Street is considered anything that has to touch with consumers. So we were both pretty much set on the title From Main Street to Wall Street. And I started looking up basically names for the podcast that could work. And Main Street instantly popped up.
That's great.
With you and Main Street Research. So my first thought was like, wow, how small is the world? And then I had actually realized that I recognize you from a lot of the TV interviews across platforms and TV networks that both you and I do. So honestly, it's very funny how the stars align. And I'm very grateful that you were able to come here. Now, I'd love to learn more about, before we even get to Main Street Research, which I love data and I love research, I'd like to learn more about you. How did you get into finance and how did you get into investment and private businesses and entrepreneurship?
Yeah, thanks for asking. It's a great story. I guess I think that because it's mine. And there's some cross currents between how I named it Main Street and what you do. And I was a really lucky kid, is what I'd like to start with. You know, I was at a really young age. My uncle had the Wall Street Journal, and I remember seeing all the figures and the charts on the actual paper back then, and just being fascinated. What is that? And this is way before gaming and all that other stuff. And I just had this fascination. What is that? And he would teach me a little bit about it. And I must have been maybe a young teenager. And then when I went to college, I was an early adapter of the internship. You know, now it's very popular. Hard to get internships these days.
Yeah. And
I knew I want to chase this thing about the figures on the newspaper. And I worked at a company at the time called Rothschild. LF Rothschild. And this is my second year of college. And so there was a guy named Mike Donahue. He said, he was in the investment business. Rothschild was a popular name back then with Lehman Brothers and Smith Barney. This is back in the mid 80s. And he said, and I showed a lot of interest and during the summer for the internship, which was again rare. And he said, kid, I'll teach you everything I know. You seem like you really like this. And I think one of the messages that I try to tell my students, because now we run a nonprofit teaching students, is try to find your passion at a young age. And so, as I say, I'm a lucky kid. I really found that passion, and so I worked with this at that point older guy who taught me a lot. And he said to me, I went to college not far away. He said, like during the school year, if you want to carve some time out, you can come back in and, work at minimum wage, I think it was. And I was happy to do so. And so we worked side by side for a couple years. And boy, it was so inspiring. And it really set the journey for this career that I consider to be fun, not necessarily a work, which is, again, so grateful to have that experience. So I came out of college with all my licenses. So at a really young age. So I sort of a bit of ahead of my peers upon graduation. And then I went to work for a much larger organization, another one kind of like Rothschild, which you probably heard of, Lehman Brothers.
Yes, that one I've heard of. I'm not in finance, but I have heard of Lehman Brothers.
Yeah. And that's, the inspiration of Main Street Research came from working at big institutions like that, where I learned managing money and helping investors that are institutional investors wasn't really, I wasn't really attracted to that. I wanted to get closer to the client satisfaction, the humans, the families, and so that's working at a big firm like Lehman made me yearn. Where is this? Where's the client satisfaction in
Hmm.
this? And that's what really gave birth to leaving the big place, starting my own organization, and in the name Main Street Research, it came from a couple of things. One was, and I was young then, wasn't married, no kids, so I could have, take the risk of
Yeah.
starting a business. And I found a wonderful spot to do this outside of San Francisco, where I was living at the time, and it was on Main Street. And I thought to myself, this is a perfect street because it's sort of a neighborhood. It's about people, not institutions. And I said to myself, well, I'm on Main Street. Let's call it Main Street Research. And it'll be focused on managing money for families and hopefully second generation and third generation of families. And then later, and now it's evolved to families and nonprofits, which is kind of where our heart is. So I was a lucky kid. I just got the bug early. I still have the bug. And I just love working with individuals, families, and nonprofits.
That's such a sweet story and so amazing. I'm a big believer in, besides research and data, also, and this is a side note, in numerology. Although I don't understand necessarily how to do it myself. I'm a big believer that numbers hold specific powers, and so do names, right? Name of a podcast or a name of a company. So the fact that you appreciated Main Street and obviously your experience across your professional career, and you were able to put all of the knowledge together and create Main Street Research for something special, that can help families, that can help philanthropic also opportunities and organizations, is awesome. And I love that you have in your naming research too. I think it, from branding perspective, once again, when I looked you up, I thought it was so interesting because very often when you see these big institutions, it's a name. So Lehman Brothers. Okay, if I'm someone, I am from Bulgaria. If I'm someone who's in Bulgaria and here's Lehman Brothers, like I wouldn't necessarily know what it is right away, right? So I congratulate you again on the great choice of naming your company, and on the fact that it has to do, again, with like research and data, which I love so much. Now let's get back to like what specifically. So you had your all of your licenses, which for our listeners and viewers who are in non-financial, because I know we have everyone from Main Street to Wall Street listening here. Those are the financial certifications in order for you to be able to trade. Is that right?
Yeah, back then it was the Series 65 or the Series 63 and the Series 7, which was a monster exam that would take, I think, 6 hours, morning and afternoon, very rigorous. And the pass-fail rate, I think, was 60%.
Yeah.
So it was really difficult. And I was lucky to take it as a college kid at the time.
And when you took those exams, you basically could then go and trade and execute trades on behalf of specific clients. Is that what you did at Lehman?
Yeah, and that's what you needed, the license that sort of spoke to you're going to be responsible and follow certain guidelines and understand all the instruments. And I think it really was, and it still is, a great platform for people if you're interested in getting in the business. Going and getting your Series 7 is a great thing. It allows you to conduct business with a client. And back then, as it is, I guess, a little bit now, it was really by phone or in person. And so you needed the licenses to be able to be a licensed broker, is what we would call it then.
And after leaving Lehman, you immediately started Main Street Research. How did you read the signal in terms of what specifically Main Street Research should offer?
Great question. And it was the driving force of making the change. One thing that I noticed in that era, this was a popular thing.
Mm-hmm.
For people to have a relationship with an investment professional, they had to pay a commission to buy and sell securities.
Mm.
And so the person who was licensed, the broker, kind of had an incentive to buy and sell more often, because the more often
Yeah,
they would buy and
commission.
sell, right, it was very self-serving for the broker. And that's why there was a lot of legal problems in the 70s and 80s with brokers doing what we call churning, right? Buying and selling on behalf of the client, but the client maybe not necessarily benefiting, but the broker doing so.
Mm-hmm.
So back in 1993 is when I started Main Street Research. My goal was the families, hopefully eventually nonprofits, but it was really to create a different mechanism to compensate myself and hopefully when I have colleagues. And so I was an early adapter of paying a fee based on the value of the portfolio.
Mm-hmm.
If the value of the portfolio goes up, we might get paid a little bit more. But if the value goes down, we get paid less.
Wow.
And no interest in the transaction commissions or being paid for the buying and the selling.
Wow.
So it was back then, that was a very unique idea. And in fact, it's kind of funny now. I had to explain it to people. They didn't understand. Oh, you're just going to charge me 1% on the value? I've never heard of such a thing. What about all the buys and sells? I'm like, no, we'll put the money at Charles Schwab. That way I can't have access. By the way, for your viewers, that's a safer way. Never give your investments to someone and have them putting it in their own name. Make sure it's in a separate custodian is what we call it. That's what Schwab is. So I had an agreement with Schwab, and then clients would put the money there and they would just pay me. If I did well, I got paid more. And that was a fabulous arrangement for the client. And I used some media attention to sort of get some momentum around that idea, because it wasn't real popular back then.
That's a fascinating model, because as someone who is very new to investing, funny you mentioned Schwab, because I just got an email that my first investment in Charles Schwab was in 2011. So I'm a recent investor. And it sounds like what you did and what the approach you had was so novel at the time, because it was so safe. And for younger or uneducated investors, including myself to a certain degree, that almost makes it feel cozy and makes it feel very nice, because I know that you're not going to skin me at the end of the month when it comes to how my portfolio performs.
Yeah, there's an alignment, right, between how the investment person's compensated and what your results. In fact, we've taken that to even a bigger degree in the last 20 years. I can't believe I've had the firm now for 32 years. But about 20 years ago, we still have a fee that's related to the assets only. But now we have a fee that's also a lower asset management fee, and then a performance fee. So it's a little bit more like, wow, if they don't do well, they even pay less. But if they do great, they pay us a bit of a bonus. And, clients love anything that further aligns their results with the compensation.
Wow.
It's a great value proposition.
It's a wonderful value proposition. Again, as I love safety when it comes to finance and investments. As someone, I'm sure, as all of our listeners, everyone works very hard for their dollar. So you want to always think carefully about it. Now, when it comes to, you mentioned a few things, and I'm going to bring you back to both of them. One of them is technology. So Charles Schwab, I think mostly kind of represents like a different thought. And I think that's why they were so successful as an institution. So I'd love to hear more about like the technological journey of how things have changed throughout the years and your experience. So starting Main Street Research, I mean, you saw Lehman Brothers, and I'm sure there are many lessons with Lehman Brothers. But how has technology changed what you guys do for existing clients over these 32 years? I think you mentioned that you've had the business now.
Yeah, I think technology has made it easier for clients to understand what we're doing, and other advisors, I hope. Um, and also, it's made it much more efficient for us to do what we do. As an aside, Rothschild, shortly after I left, went out of business. Maybe you know that historically. And of course, shortly after I left, Lee Lehman Brothers, they went out of business.
So the lesson is
So,
never let James leave.
yeah, fortunately, after 32 years, we're still here. I think those business models actually weren't great. So, and the world's kind of moved away from those. But technology has dramatically changed the business. We've met on the New York Stock Exchange floor, and you can see it right there. Not as many people, a lot more technology. And that's making, I think, for the end user investor, for your viewers, it's a safer world to be an investor because there's more transparency,
Hmm.
there's less cost, fees, brokerage fees, commissions, um, and um, and and markets are more liquid. Meaning,
Hmm.
if I really want to sell my Microsoft, I literally can sell it in 1 second. I don't have to wait a long time, and maybe the price is different.
Right.
So I think technology has allowed for the transactions to be more safe. There's a lot more guardrails around safety for the investor. And then from an investment advisor standpoint, I get these really cool statements that we generate ourselves from our in-house technology that
Hmm.
make it super easy for the client to understand. For a lot of clients, this whole thing is like a foreign language.
Yeah.
So I can show them this is how much stock exposure versus your safe bond exposure.
Hmm.
This is how we've done since we started after fees, the net return. And you can compare that to your long-term financial planning. And we can see, oh, yeah, you're on track to go where you need to go, to retire, to leave money to the next generation, to be
Hmm.
able to give money back to your community. And so that technology is very key to the relationship with the client.
I'd love to learn more about your work with private clients and families. I'm big, as an immigrant, I'm big on understanding how that generational planning works. I have 2 kids currently, I run several businesses, and really, it would be very beneficial to me as a human to understand when I think of building my kids' future. Are there any specific steps that need to be taken, and how do you work with your current clients, like from starting point to, building the generations ahead for them?
Yeah, I think, the key with families is to bring it down to a level that's really easy to understand. A lot of our clients that are, have built up some savings and need to invest, they're lawyers, they're doctors, they're entrepreneurs. They're not stock market experts. So I think that one of the things that we've really gotten good at is explaining things in easy fashion and being an educator. I think that part of being a great investment manager is you're an educator. You're drawing a map from here to where they need to go as far as the growth of the assets. And you're part therapist. Markets can make people jittery and fearful, or maybe overconfident. And so working with families is what we really enjoy because of that human aspect. And I love the idea of a client who has gotten their assets to a certain level, and they say to themselves, my wife and I and the kids, we just like to at some point have the option not to work. How can we do that? And drawing out, in a very specific financial model, looking at all their assets and being, sometimes very direct. Like, you need to save more, you need to work more, longer, um, and it based on certain risk and return.
Hmm.
We can make anything happen. The question is, how do you want it to look and to feel? So it's a partnership, which I think we all enjoy at the firm, and there really is nothing more satisfying than seeing their goals get reached. Part of the education, I think, is really key because, investors can often be scared when markets go down, like recently with the Mideast war, or they can become overconfident. And part of our job is to educate them about the history of markets and make sure they don't panic too much when everybody else is panicking, and making sure they don't get too overconfident when things look like they can only go higher. And and I think one of the things that we've learned and because we now work with many generations of the same family, is bringing those young people into the conversation earlier than even the parents think is appropriate. Bring those kids in when they're 11 or 12. They're smarter than you would imagine.
Mhm.
And I want to give them the bug that I got as an early teenager in investing if I can. So we invite and we do some educational stuff around that. And generally speaking, it works out really well because then the parents are happy, right? That the kids are learning. It works out for everybody.
And when is the best time to start financially planning? Is there a too late or too early?
Yesterday. It really is. But I think that also what happens with many people is they feel like it's just too late. I should have done that, 10 years ago. So I won't do it. Or, I have inertia. And it's like planting a tree, right? The
Yeah.
best time to plant a tree was 20 years ago, and the next best time is today. Really, I think some people feel like it's a daunting experience. I really don't want to know the truth, how long it might take, if it's possible. And I would say to most people who have those feelings, it's much more possible than you think, and
Mhm.
particularly the earlier you just go after it, and just find somebody who's a really good listener and has a great number of years doing it, and a lot of satisfied clients.
I find finance again years ago when I moved to the States, I found finance just so complex and overwhelming. Really, it makes you completely overwhelmed in terms of what you could do, and again, risk and volatility, and like what's good when it comes to investing, and maybe what to stay away from. And having a good educator I found is incredibly important. So my mentor who lives in San Francisco, she taught me early on in my life in America that if you have a dollar, that's how she explained investing. If you have a dollar, you want to send your dollar to go to work every day and bring you a friend. So
I
then
love it.
you have several dollars, and then you
Yeah.
send the two friends then back on the market the next day to find you a few more friends. So you accumulate, and that there are safe spaces and safe places basically in terms of investing. But I love what you said about the education piece because it's very often, it's crazy to think, but there are many adults out there who feel overwhelmed because they never got educated. That's not what our education system, I think globally, is really doing a poor job at teaching us about money and finance. So I love that you mentioned that education piece because I know how important it is. I'd love to learn more about that institutional aspect. So, you mentioned in the beginning of the interview that you don't only work with families, but you also work with institutions and nonprofit organizations. So, I'd love to hear more about that.
Yeah, I think it's important that we all give back if we can afford to. In fact, with clients, we sort of teach them like if there's room, right? We want to inspire them to give back, even if it's a small amount. If everyone gives a small amount, it has a huge impact on the nonprofit space. Nonprofits are typically organizations in our local communities or global communities that are giving back, helping those in need, whether it's income, education, what have you. So I'm just really inspired, and I love to get a new client that's a nonprofit so I can help them grow those assets and protect those assets in the bad markets.
Mm.
And I really think that that's important. A good investment advisor should be able to go up when the market goes up. But a really good investment advisor also should be able to let you know when markets get really horrible, we're going to do something about it. And that's a differentiator at Main Street Research. So our work in nonprofits, we're very enthusiastic, and I wrote my second book. I wrote was actually all about investing for nonprofits, teaching again, nonprofits how to have the right documents in place. There's a lot of regulations, so we
Mhm.
know all about that. But more importantly, have an investment policy that has a roadmap of how can we increase this value so we can give back to the community. But there's even a little bit in there because I personally am an advocate in my personal life of giving back. So I'm teaching them how to get a donor, how to retain your donors. As a donor myself, it was an easy chapter to write. And it's really important for nonprofits to understand, where do these donors, where are they, and how can I attract them? So we're investing for nonprofits to try to make them bigger in assets, but we're also educating them.
And Main Street Research, if I'm correct, has a large portfolio of several $billions. Is that correct?
Yeah, 3 billion. Well, it's 2.8 as of yesterday. Who knows? It moves around.
That's incredible. I love the story. I love meeting entrepreneurs, and again, I love self-built. It just reminds me again of how lucky we are to live in America as someone who moved to America from another place, to be able to build here and amass knowledge along the way and share that knowledge and also share the wealth, which is very important to me as well. So you mentioned you have several books. One of them is actually sitting in front of us, which we'll make sure to link for our viewers and listeners, which is called the Wall Street Lessons. Tell me more about the book. What prompted you to write this book?
What prompted me is my history of working with families and individuals. And, typically when somebody, by the time they get to us, they've had some bad experiences doing this themselves, or they had an advisor that just didn't work out so well. And usually it's because I like to say the human brain kind of plays tricks on us. We are our own worst enemy when it comes to investing, because we have this thing called emotions and psychology. And so we often, and you can see it in markets. When markets go up after long periods of time, people tend to get more confident, or if not overconfident. Some of the biggest amounts of assets that go into the stock market are usually right before it collapses, because
Interesting.
the long-term trend, finally people feel comfortable. If it's gone up for 5 or 6 years, it can only keep going up. So they fool themselves into going in bigger and more risky right at a time when it's probably the least likely to be good for them, and vice versa. When markets fall precipitously, like in 2008, when you moved to the country, we were seeing a market that fell 50%. People were selling. Most of the selling occurred right towards the bottom of that market, when people should have been buying. So this book was really born from looking back at past investor mistakes that I've seen them make, and making lists of them. Things like fear of missing out, FOMO, which we're familiar with, right?
Of course, yeah.
And lots of others are all packed in the book. And it's another book about educating investors to not let their human brain allow them to make these horrible mistakes. And that's part of the Academy of Finance, which is a nonprofit I started to teach high school and college kids to be better investors. And we start out with the book and teaching them to get the right mindset to be a good investor. And then we teach them all the other fundamentals of what it takes to be out there in the investing world.
Wow, the psychology of investing, and again, the education that goes into tricking our minds that we should always be positive about the outcomes, possible outcomes, and have that mindset. That's fascinating. I thank you so much for the gift, because I will read it. And maybe that will be the first book that I start my kids with when it comes to financial literacy and education. James, it's been such a pleasure and honor to have you. Thank you so much for coming on the show. And once again, congratulations on the lovely marketing trick with Main Street Research. I would have to say that you have definitely coined the phrase, and we're following after with Peter. But thank you so much once again. Pleasure to have met you. And to all of our viewers and listeners, please make sure to follow the Money Signal podcast on all major social media platforms, and check out our website, moneysignalpodcast.com. See you soon.